Alright guys, so here is an example number 1 for the Holy Grail model. Notice that I didn't show you the examples from the high time frames, but I'm going to use the high time frame combination here. So from monthly, we're going to go to the daily time frame, and from daily, we're going to go to 1 hour time frame to look for our entries. Like similarly, you can go from daily to 1 hour to 5 minute, and from weekly, you can go from weekly to 4 hour to 15 minutes. And for daily, as I said before, from daily to hourly to 5 minute, and from 4 hour to 15 minute to 1 minute. I wouldn't say 1 minute, just go with 2 minutes. That is actually reliable than 1 minute. So what do we have? We have taken out external liquidity, right, on the monthly on GBP USD. We have this fair value gap in the discount, right? Sorry, in the premium here. So that is going to be our draw on liquidity. So price takes out this. Let's go to the daily time frame and see what happens. So price takes out the liquidity here. Now we want to look for a market structure shift on the daily time frame, and we have the market structure shift on the daily time frame here. Look at this fractal high here. We have a candle to the left, right, which is shorter than this candle, and then we have the candle to the right, which is also shorter than this high. So that is our fractal high. Price breaks that structure, right, giving us a market structure shift. Now looking back here, where is the PD area in the discount? This fair value gap right here, right? There's no clean auto block, nothing, just this fair value gap. So we mark out the fair value gap. And remember, when you are on the higher time frames like 4 hour, daily, weekly, and monthly, you want to use the 0.5 level of the Fibonacci, of this gap, of this fair value gap, right? You don't want to be looking for confirmation entries when price taps into it straight away. Just wait for price to come into the 0.5 level. Okay, so drawing the fib on the FVG, you can see we have this is the 0.5 level. Let me delete the fib. Oops, my bad. Damn, right there. So let's go here. So now once price is into our PD array, we want to mark out the range high, which is this, right? So we're going to mark out this here, and this is from where we're going to scout out the 1 hour market maker model, right? We want to look for a market maker model starting from this move down, right? Because this is the last move when before price went to this PD array, right? So we want to look for a 1 hour market maker model, right? So price is into the 0.5 level here at the moment, but before that, we want to identify the consolidation phases. So right away, what you can see is we have this consolidation phase right there. Then we have the accumulation phase 2. So basically, the first consolidation is called consolidation. The second consolidation is called accumulation 1. And the third consolidation is called accumulation number 2, right? Accumulation could just be a pullback, right? And it would be considered a consolidation. But for the first consolidation, you have to look for a decent size or decent consolidation, something like that, right? It doesn't have to be like a big consolidation. Just train your eyes to just identify consolidation. This is a clean consolidation. You can see we have these highs here, then we have this lows here, right? So price is like going nowhere. We went up, down, up. That's it. And then we have push up, push down, right? We have accumulation down, into our PD array, right? So now what we want to do is we want to look for a shift in the market structure on the 1 hour time frame. Remember, we're going from monthly to daily to 1 hour. So right here, what do we have? We have a shift in market structure, and we have this clean auto block. Remember, bearish candles, continuous bearish candles. So now from here, we're going to go long right there. We're going to put our stop right below this low, and we are going to target the consolidation high, which is right here, giving us 10.7 something risk to reward. So most importantly, our entries during London 3, right, at 3. So let's see how this plays out. So it consolidates for a bit. We have a continuation purge here, right? But our target is fixed, and right there we have our take profit hit for 110. So let me teach you something else. Use your Fibonacci from this range high to this range low. So every single PD array after market structure shift is going to be respected. Every single order block below the 0.5 level. Once price is above the 0.5 level, the chances decrease, right? So you want to get in before price goes above 0.5 level. And I mean, I'm not saying that price goes above the 0.5 level, then comes back and you cannot take the trade. Yes, it is possible. When price goes above 0.5 level and then comes back into discount, you can look for entries. But you cannot buy above the 0.5 level. That's what I'm saying. So over here, you can see we have hit the take profit. We had this breaker block here and price respected this breaker block here, then came back here and filled in this tiny little fair value gap here, right? If you can see it. And we also took out this. So that was continuation at around 8. So remember I said mostly the continuations purges happen during from 8 to 10:30, right? So we have a continuation purge right here and the ABCD. Remember, I mean, it's not necessary to get the ABCD. You just want to see a purge on the liquidity, right? And that's actually pretty much it. You can see we came into the breaker block and then we had our take profit level hit. So very simple, guys. You just have to identify the consolidation phases and you will be good. Okay, and you can easily pass your challenge with one trade if you get a proper setup. So let's move on to the next example.